Hello and welcome everyone to Justworks' Ask an Expert series. This is our third installment. How should small businesses approach financial planning during COVID-19? My name is Moses Ballion. I'm a certified HR consultant at Justworks and will be your host and moderator today. Our expert joining us is Johnathan Mirian, Vice President of Finance at Justworks. Also joining us is Mark Rosenberg, Manager of Product Support at Justworks, who is an expert on all things pertaining to how Justworks administers payroll, benefits, and other product for our customers. So thank you so much for joining me today, gentlemen.
Thanks, Moses. Hi, everyone. I'm Jonathan. You may notice that both Mark and I have slightly different hairstyles than our old Justworks headshots, especially Mark. It's been a while since we've been at a barber, so maybe some of you can feel that same way. So I first want to say thank you for joining. I assume everyone, particularly finance leaders, are busy right now. I'll try to make this as efficient and straightforward as possible. I don't consider myself an expert, but I've got a few thoughts that might be useful as you all navigate the current environment. Mark Rosenberg, who is our product specialist, which Moses mentioned, has been at Justworks since the beginning of time, at least it feels like that, and has kindly joined to answer any PPP specific questions during the Q&A. So thanks, Mark.
Happy to be here, Jonathan.
Yeah, I'm glad you're here too. That said, I'm just going to jump in.
Great, Jonathan. Before you begin, allow me to make our in-house counsel happy and deliver our standard disclaimer that this material has been prepared for informational purposes, is not intended to provide legal or tax advice. With that, let's please move on. So, Jonathan, small businesses are being hit especially hard by COVID-19, creating a lot of uncertainty in the economy, on Wall Street and on Main Street. Today, I'm really excited to talk to you about this issue and ask for you to share some strategies for approaching financial planning for small businesses in the months to come. So with that, please, I'm really eager to hear your insights. Take it away.
Great. Yeah, if you could just move to the next slide. Awesome. So yeah, acting now is key. If you haven't already, I would spend the next few days with your leadership team and take stock of your monthly burn based on your current revenue expectations and expense structure. If there are immediate changes that need to happen in order to extend your runway, I would do them now. Companies that delay key decisions from a cost-cutting standpoint tend to suffer from death by 1,000 cuts, whether that's from a morale standpoint or a cash perspective. It's better to make one big cut than a bunch of incremental ones, in my view. So, formulate that current view and project that out at least through the next 12 months. This will give you a base case model that will inform your future cash requirements. So that's what I would do now. Next, I would throw your current yearly operating plan out the window. If your fiscal year ends December 31st and you had a plan you created and locked at the end of 2019, that plan is likely no longer connected to reality. Not only that, but it's critical that you and the company as a whole can be agile. You want to be a fighter plane, not a cruise liner. I would suggest that you use your base case model that you have formulated based on your current revenue expectations and cost structure and update this on a monthly basis as you collect more data. Further, I think forecasting your cash on a weekly basis is important during this time. So I'd like to talk about that now, actually.
Jonathan, that's thanks so much for this guidance. I just want to maybe say what everyone's thinking here and ask you to provide some reassurance as far as tossing the old cash plan out the window. So that is destabilizing, a destabilizing thought for anyone, certainly for me. So as we go on, I'd love to hear any recommendations you have for finance leaders for sort of regaining their footing and also for maintaining their confidence and sort of their station as experts within the organization amidst this dramatic upheaval.
Sure, yeah, absolutely. And I think that really starts with cash. The phrase is cash is king, and that's very true, especially during these times right now. So if you're a CFO or a head of finance And you are usually used to only approving invoices or contracts that are above a certain limit, whether that be $50,000 or $25,000, whatever that threshold is that comes across your desk. I would immediately, like today, make that limit $0, meaning you need to be seeing everything that comes in and out of the company. It's vital that you have a clear view of all cash movement, and that expense decisions during this time of uncertainty are coming from a central location. And that location should be the CEO or the head of finance. My view is that you as a finance leader should have an iron ring around all current and future expenses so that you can control cash flow to a high degree on not a yearly, a quarterly, or monthly basis, but on a weekly basis, which is probably something that you haven't been doing before.
Jonathan, I'm really curious to hear, I know in your position as a finance leader, you're probably, or anyone who's a finance leader who's watching would probably be very reassured by your guidance to really take the reins as finance leaders and be the undisputed central node of approval and budgeting and all these things. I know we're talking to a lot of small businesses out there. Probably some founders and CEOs are watching who have, maybe were that person before they were big enough to bring on a CFO. Maybe people who are don't want to surrender total control. This is to say founders don't want to surrender total financial control or are used to having a huge say in things. So should finance leaders, directors be sort of reining in the control a little bit and setting some boundaries? Do you have any recommendations for that?
Yeah, I mean, I think in any organization, the person that's closest to the cash flow is generally your finance person. And so, if that person is given the power to make sure that they have total insight into any future invoices that are coming in or any accounts receivable that we're likely not to collect, it's important that that viewpoint is collected into one spot or node, like you say, Moses. And so it's critical that this function in the company is empowered to at least get some very tight controls around cash flow.
Thanks, Jonathan. And I know I'm in the privilege of being able to ask questions as they arise in my mind. I wanted to let our whole audience know that we will be hosting a live Q&A with Jonathan and Mark at the conclusion of this. So please formulate your questions. If you just can't wait, put it in the Q&A box below. That's where we'll be fielding live questions. So please look forward to that in about 8 to 10 minutes.
Great. Thanks, Moses. Yeah, so going back to this weekly cash flow forecasting, I know this sounds probably basic, but a good first start is to create a list of all current AP, accounts payable, ranked by your largest payment to smallest, and forecast out that based on the due dates of the terms, whether that's net 30 or net 60. What this does is it enables you to understand when cash outflows will occur. And similarly, you should be doing this for your accounts receivable. So when will cash be coming in? And if you update this every week, you'll be able to react before the cash leaves your bank account, and it protects the company from a surprise cash crunch. I think it's super critical right now that you can sort of do this exercise on a weekly basis. And another thing that this does, depending on how large your company is, some heads of finance don't know every invoice that's paid or every vendor that is used. That goes back to kind of like the layer that you need for approval of AP. Sometimes you may not see invoices below $50,000, depending on the size of your company. And so this exercise will allow you to become intimate with what makes up your expense structure. You may be actually surprised where your company is spending money. Maybe you didn't know that you spent $10,000 on cupcakes, for instance. Not to say that Justworks does that, but I think there may be some surprises that come out. And so I would take this opportunity to see what expenses are necessary versus what are nice to haves.
Could you guide people on making those decisions? I'm a big cupcake guy, Jonathan, so convince me that these are nice to have. I'm just kidding, but how do we know?
No, I think during this time, it's a great opportunity to take a hard look at your vendors, and it should be it shouldn't be a company-wide discussion, but it should be a discussion that, across your key decision makers in these different departments. And there could be tools that you use currently that just aren't critical to the ongoing workings of the business. And so if you do have to make cuts, I would weigh each dollar versus another dollar when you're thinking about spend.
Okay, so if I may dampen the mood a little bit, can we talk about that with respect to headcount? I know that was going to be your next point. So,
Yeah, no, happy to. So on payroll expense specifically, which usually is your largest cost in your cost structure, and then there's rent usually, but specifically around payroll, I think hard decisions around headcount and salary may need to be made depending on the situation, and depending on how your revenue has been affected during this period of time. In the last few weeks, we've seen companies like Uber and Lyft and Airbnb make large cuts to their headcount. And we've seen many companies over the last few weeks reduce and cut salaries. When contemplating these decisions, and you may have to make these decisions, it's important to weigh the dollars with other intangible factors like morale or productivity. Also, it's important to think about what happens when all of this is over and we're gaining ground and growing like we were before. You want to have those heads, those people, those resources within your building or your virtual building, depending on how all this shakes out, to capitalize on the new environment. So you want to think about headcount not only in the dollar perspective, but also in a morale and productivity standpoint.
how about debt? I know you taught me yesterday when we were meeting before this what a balance sheet is. So how can we effectively manage debt during this time?
Yeah. So companies have debt, and it's depending on how it's structured with your agreement with your bank. This could be a big impact on cash, and there are a lot of agreements with debt that have obviously covenants attached to them. And so in this time where your revenue may be declining instead of growing, or whether your cash reserves are decreasing instead of staying flat or increasing, some covenants with your debt facility may be tripped. And if those covenants are tripped, that could mean that the whole amount of debt that you have outstanding could be due immediately. So I think it's important to get ahead of that before it actually happens and just open that conversation up with your banks. Generally, most lenders will want to work with you so that you can succeed. But they don't like to be surprised. So if you do think that some covenants will be tripped as it relates to your debt, I would definitely be proactive with your banks.
You mentioned being proactive and forward-looking. So we talk about sort of the immediate weekly cash management strategy. I would love to hear more about what we need to consider when thinking ahead and planning, if you care to elaborate.
Yeah, no, absolutely. So there's the weekly cash exercise that I'm suggesting that you all do, and then there's this whole idea of a plan. So let's talk about that. Typically, companies meet a few months in advance of their fiscal year end. They develop strategy. They have conversations with their department heads. They settle on a budget, and then that budget will allow them to execute on the broader strategy and hopefully meet or revenue goals. And most companies do this once a year. For a lot of you, these plans were probably locked in November and December of 2019. But as we all know, the world has definitely changed since then. And a lot of the assumptions that you had in that model are probably they no longer hold. So like I mentioned at the top, my advice is to scrap that plan and create a new base case based on your current situation. So what do you really think will come in from a revenue perspective, and what is your current operating expense structure? And so what this base case allows you to do is it allows you to make decisions. This base case will be your touchstone throughout this really uncertain time. And so with this base case set, you can come up with milestones that will let you know whether you can either deploy more capital to invest in growth, or stay the course and maintain your current expense, or make cuts. These milestones or triggers will probably depend on the company. They could be anything like a trigger around bookings or new sales.
Yeah, I wanted to ask you about that. That's a big question for a lot of businesses out there, and how do we forecast that? So what are your thoughts on predicting bookings? It's like timing the market in some cases, like good luck.
Yeah, no, totally. It's very difficult. I think the key word here when it comes to bookings or new sales is to be conservative. So if you don't think a deal will close necessarily, don't count it in your revenue forecast. But it is important to set some kind of base case level of new sales goals so that you can see if you're trending better or worse than that case. And so once you set this kind of initial model, I suggest that you update this model every month going forward and create a new rolling 12-month plan. And each time you create this plan, take everything you've learned from your sales team, from what you're seeing with your current customer base, what you're learning in the news or whatever government policies are coming down the pike, and have that educate your new plan every month. A cadence that might work, and something that I've been suggesting is on the 15th of every month, update your financial model. Then the third week, discuss within your leadership team whether you should be deploying more capital based on whether you're trending better or worse than your revenue plan, making cuts if you're trending worse. And then in the fourth week, you socialize that to key stakeholders across the company. And you kind of repeat this cadence every month until things start to stabilize. But I think it's key, like I said, to be agile and more like a fighter plane versus a very slow moving, organization.
Mm-hmm. Or the image that came to my mind is like a soccer player, like be prepared to change directions and reassess your situation almost constantly.
Yeah, I like that, Moses. I like that image.
So, you and I talked about things you can control and can't control. I mean, that's like a huge tenet of the whole narrative right now, from economic experience to one's personal or emotional, psychological experience during this time. And what wisdom do you have around those factors?
Yeah, this lesson actually came up not necessarily in because of what's going on now, but it was something that happened a while ago, and it's a big lesson that there are certain things you can control, there are certain things that you can't control, and so revenue in this situation is very hard to control. So I would view your expense structure, bear with me, as your kind of your steering wheel to navigate during this period, because this is what you can control. This is how you can steer through this situation that we're all in. And so that's why it's so critical to be updating this, this view on expenses every month and compare it against what's coming in the revenue. This agility, this ability to turn left or right on a short notice is key, and it starts with your expense structure.
Thanks, Jonathan. I can't appreciate your insight enough. One of my privileges in HR, I'm getting exposed to all the things that I don't know. And so I really appreciate you enriching all of us today, both the experts and the newbies, to sort of financial modeling. So in summary, I'd like to summarize based on how I heard you, which is to first pause and assess where you are today, reestablish your priorities, maybe even chuck the whole thing in the recycling bin and start from scratch as needed. Then you recommended managing cash on a weekly basis, sort of reassessing your reality every week, and then planning on a monthly basis, whereas before the runway might have been a lot longer. Anything I'm missing?
No, you did it perfectly, Moses.
Cool, great, wow, I'm quick study apparently. Well, awesome. I'm really excited to move on to our live Q&A, so we can field registrants and attendance questions in real time. There was one pre-registered question I saw that I wanted to get to for you, Jonathan, that I thought was a great one, and that is, let me see. Do you have any specific tools that you'd recommend for scenario analysis and forecasting?
Yeah, you know what? I mean, there's solutions like Host Analytics and Adaptive Insights. Those can be pricey. They take a while to implement. It's a big resource suck. Depending on what the size of your team is. Honestly, and what we use in a pinch is Excel. So our friends at Microsoft Office have a really good solution, and honestly, that's all you need. Yeah, I wouldn't spend the money of their time right now to implement a new scenario planning software solution.
Well, right, because you'd have to basically onboard everything into that system when time is of the essence right now, right?
That's right.
Yeah, that sounds like a pain. My very first job out of college, I did some bookkeeping and saw firsthand, like, oh my God, just getting everything under the right cost center and classification, it's
tricky.
daunting. Fantastic. So let's take a look here. Yiping Kwan has another question that I think would be well suited for Jonathan. What tips do you have for contract negotiations in this time? What can we ask or say to ensure that annual contract costs are lower?
Yeah, I honestly, I would be honest, and say, hey, we like your product, we like your software, but right now we're trying to reduce cost, and we really need a price reduction. The thing about SaaS, so, software solutions is that things can be negotiated down, and so I would try to push on the price and just be honest up front. And also a big thing, particularly now, is around the payment terms. So, if you have an annual contract that's coming up, I would honestly try to push that to a quarterly contract or a monthly contract just to spread out those cash flows. Because we really don't know how the next few months are going to play out, depending on what kind of industry you're in. So, I would be honest. I would say, hey, let's try to cost. I like your product. And also let's try to spread out those payment terms over monthly rather than annual.
Great. Thank you so much. I wanted to jump to, while more live questions are trickling in, I wanted to talk about PPP a little bit. So excited to draw on both of your expertise. Some of these questions are going to be specific to Justworks. One more generalized question surrounding PPP, maybe on a lot of people's minds, is, do we need to adjust payroll cycles to fit into this 8-week period that I believe is from May 1st to June 30th? If yes, how might we go about doing that?
Yeah, I can take that one.
Thanks.
So yeah, this is definitely something we're hearing a lot from our own customers. So I think it's really important to talk with any of your legal counsels that you have at your disposal. Always a great resource for you to talk to just to get more opinions and advice. From what we think right now, the way that we at Justworks are interpreting this is actually pretty, it's difficult to actually change the pay frequencies for your employees, because when you hire them, when they sign their offer letters, they're agreeing to get paid on certain dates, right? So maybe that's every other week, maybe that's the 15th, the last day of the month, something along those lines. So if you're going to change your payroll frequencies to fit in this report, there's actually a little bit more of a trickle down effect, right? So you're not just talking about like making everything fit into this 8-week period, which will start from when you receive the funds from your lender until 8 weeks after that. So it's really important to think about not just like fitting everything into that time frame, but also what are the other ramifications there? Like, are your employees expecting to get paid on certain dates? Are you going to have to re-talk to them or come up with some other kind of legal language that you'll need to provide to them to say, hey, the days that you receive money is actually going to change now, so we can fit it into that. So our impression right now is to keep things the way they are. I know that makes things a little bit more difficult, and they're not going to perfectly align with that 8-week window, but it's going to save a lot of other troubles that come along the way with changing these pay frequencies for your employees and then having to answer why certain timeframes might not be exactly the same as the other if you're moving around those frequencies. So we actually think that keeping things as are is going to have the best results for you.
That's really helpful, Mark. Thanks. And now we're back into my comfort zone. So I'll say that, changing the terms, the core terms of the employment relationship is no small matter. Lots of jurisdictions out there, certainly New York, where Justworks is based, California, among others, have very strict wage theft prevention notice requirements where you have to provide employees with certain paperwork to change the terms of their compensation, among other details. So it should not be taken lightly, absolutely. Great. So Mark, a customer is asking, will there be a Justworks invoice or payroll report that delineates PPP eligible costs versus those that are ineligible? This customer says they've already received their PPP funds.
Awesome. Well, congrats on receiving the loan in the first place. I know that was a huge step for a lot of customers and just people in general to go through. So congrats on getting that. Yes, so we are working hard on that. We know that the big thing is after you receive the loan, forgiveness is obviously really essential, right? That's like kind of the whole point of why you're doing this. And we know this is a really nerve-wracking experience for customers. You want to make sure that you're doing everything the right way, that you're remaining compliant. So this is absolutely something that we're taking into consideration. And we are actively working on this now. We started building this. So if you are a Justworks customer and you applied for a PPP loan, you'll notice that we built a special report that you could download and provide to your lenders. And we're working on kind of like the bookend version of that. So then you'll be able to have a report or a receipt, if you will, that you'll be able to send to your lenders and say, look, this is how we spent this money over these over the 8-week time frame, and this is where the funds went, so they can know that you actually use the funds appropriately. We're working on this right now. It's in development. a tricky thing is with all of the information that's coming out right now, with these IRS changes, with everything that's going on with our government right now, these changes can kind of come out overnight, right? So like these changes, they happen all the time. So even the news that we knew yesterday is no longer relevant today. So we want to make sure that we have all the right answers from the IRS, from the Small Business Alliance, to make sure that what we're providing is actually going to work for you, and this is actually going to be something that is accepted by the lenders and not kind of put you in this runaround or a holding pattern. So we're working on it. We still ourselves are waiting for the official guidance to make it as clear as possible for our customers, but it's absolutely top of mind. And we know that it's the 8-week time limit from when you actually receive the loan. So we know we're up against the clock, and we're working to make sure that you'll have that in time. But yes, it's coming soon.
Awesome. Thank you, Mark. Great time to be a Justworks customer, if I may say, for all that we're doing, all the work you're doing. I just assist with HR issues. So Jacqueline Koo, speaking of HR, regarding PPP, we have employees that are not willing to come back on site to work. One, are we able to provide 75% of pay to those, while those who return receive 100% of regular pay? And then two, are employees still able to get EDD for reduced work hours if they're getting paid 75% of wages? I'd love to be the first one to tackle this question. Jacqueline, you mentioned the EDD and you're in California, so particularly stringent employment laws there. Paying employees based on their willingness to return into the office to work is a very, very dangerous idea. I do not recommend it. Please work with counsel before you implement anything resembling what you've proposed. And the reason is because certain employees, you have to watch out for correlation between the decision not to come back to work and protected characteristics. Protected characteristics such as age, disability, which includes mental health conditions, among others like race, sex, religion, etc. Age is particularly important because the people who are saying they won't come back to work very well might disproportionately be the percent of your workers who are age 40 or older, who are protected due to age. So if you are reducing pay, again, disproportionate to your population, this is called adverse impact, of your older employees and not your younger employees, they definitely have a case to go to the EDD and allege that they've been discriminated against on the basis of their protected characteristics. So again, truly dangerous. Like, make sure you do all of your due diligence before implementing a pay structure based on in-office versus remote work location. Did either of you have anything to add?
I think you summed that up pretty well.
Yeah,
okay, thanks,
nicely
Mark.
done, Moses.
Another PPP question, David, no last name, asks, we're an S-Corp. If owners were not included in the pay periods that our loan was based on, so unpaid owners, as they're colloquially called, what do you think about including them in payroll today with PPP funds? We are debating if paying owners will raise a flag and put our forgiveness in jeopardy. So what I'm hearing is putting owners on payroll and making them paid owners where they receive both draws and salary.
Yeah, so for that one, I think your hesitation seems accurate to me. It's definitely a little tricky about like what you're going to want to incorporate and not. I think the best thing that we've seen from a lot of our customers and just talking to our outside counsels, you're going to want to keep things the same as they were before and not really introduce new things that might cause these flags. Again, I would always suggest if you have outside counsel or an accountant that you can work with just to get more opinions is never going to be a bad thing. But from what we've seen so far, I wouldn't suggest making those kinds of changes or introducing new parts into this report that could jeopardize any of that. I think what we're seeing a lot of the times and what even comes out in the news right now is that, you know, you should be rehiring back the people or paying the people that were your employees before, really making sure that the headcount stays the same. So I think this can fall
your
into
employees, right?
Right. So I think this could fall into kind of a similar category where you don't want to be making new changes or introducing new things that weren't necessarily part of what you applied for from the beginning. So that's what I would personally would interpret that as.
I appreciate that, Mark, and definitely work with counsel and your tax advisor to firm up that decision. Jonathan, I had a question for you. It seems like sort of debt management and contract negotiation is a big question, recurring question here. Anonymous asks, do you have any advice on managing credit card debt specifically? And this probably applies to young starting up businesses. They say, we've been paying credit card minimums just to save on cash flow, but paying those high interest rates. So maybe this is a debt consolidation question. How do we manage those high interest debts?
Yeah, it's a good question. I would be very careful to be utilizing credit cards to a huge extent during this period of time. I mean, I know it might be tough to avoid, but as most people know, the credit card has a very high interest rate. So if there's any way that you can consolidate that with some kind of debt facility from your bank, which banks generally have much lower interest rates, I would do that. I would suggest to do that. And if you do have the cash to pay off the credit card amount that you currently have right now and not pay those high interest rates every month, I honestly would do that rather than taking the hit every month with 11, 17, 20% interest rates. So if you can, pay it off and then limit that use going forward on the credit card. And if you can't pay it off right now, try to consolidate that debt with some kind of bank facility.
All right, thanks so much, Jonathan. And thank you, Mark, as well. With that, we're at time. I'd love to wrap up, but thank you for fielding these questions off the cuff. It's no easy feat, but you two are clearly a wealth of knowledge. So I really appreciate both your expertise today. So thanks for joining us.
Thanks, Moses.
Thanks so much.
everyone.
Thanks, guys. With that, I want to let everyone know about next week's session. Please tune in for episode 4 as we speak with Mike Seckler, Chief Operating Officer at Justworks, on managing leadership, on leading in times of crisis. So don't miss that. C-suite access. I don't get to talk to Mike whenever I want to, and you guys are going to get to next Wednesday. So definitely not one to miss. Also following this, all registrants for this webinar will receive an email with a recording as well as additional resources and updates. And we're going to answer one question from the Q&A that we didn't get to in our follow-up email. So you'll see that in your inbox. Thank you again so much for joining us. Thank you, Jonathan and Mark. And we'll see you next time, everyone. Be safe and be well.